But let's talk about gold loans, and who better than George Alexander Muthoot, MD at Muthoot Finance, joining in the show right now. George, hi, good morning. Good to have you on the show. The gold loan market, George, has continued to gain a lot of traction. You had earlier guided for a 15% loan growth guidance for FY21. Does the strong outlook now make for perhaps an upgrade in your previous guidance, or would you stick by with the 15% figure?
Good morning and thank you. I think the guidance which we gave last year, maybe a few months back, about 15% for this year, still holds good. But I'm sure we will be able to do much more than 15%. At this time, I wouldn't want to make a change in the guidance, but just compare it to last year where we did more than 22%. So this year also we should be able to definitely do much better than the 15% guidance given. At this stage, I wouldn't want to give a revised guidance on the growth for this year.
Sure, but just a ballpark estimate, would it be a meaningful uptick from the 15% figures?
I'm sure it should be a meaningful uptick, yes.
Good to hear that. Retail gold loans have gained a lot of demand as well, George, supported by the rise in gold prices. What's really fueling this growth according to you? And do you expect the momentum to continue in FY22 as well when it comes to retail gold loans in particular?
See, the big demand in the last 6 months would have been most of the pent-up demand, and also the demand coming from newer sectors, newer players and businessmen, smaller businessmen, traders, etc., who are not easily getting the finance from the earlier sources. So now banks have also slowly started opening up their fists, and they started lending also. So business is also picking up. Earlier demand was for actually restarting business, etc. I think that is behind us now. Now people are now looking at growth. The growth story of India is slowly coming back. And when growth comes back, people need extra money. And that is what we did last year also. Last year there was no COVID, but still we were able to grow well because the economy was doing well. So when economy does well also, there is additional demand for funds. When additional demand for funds are there, gold loan is of course a good option to get that additional demand, that incremental fund requirement. Very good sources, gold loan, and that we have earlier seen also. And I'm sure in the next quarters and next year also, when the economy is really going to pick up, gold loans will play a very important part, and demand will also be quite good, is what I expect.
Mr. Muthoot, the LTV on gold loans at 90% for banks, that puts them in a better spot. What is the current LTV for Muthoot Finance? Will NBFCs lose out on market share to banks in the long term?
No, I think after a lot of thought about 6-7 years back, Reserve Bank had put this LTV of 75% max cap. And even today, not everybody takes the 75%. Even on any day, even though the maximum LTV for NBFCs, we also give only maximum of 75%, the average people take is only 69 or 70%. It means that not everybody wants the 75%. Now your question about the 90% dispensation given to banks, I think Reserve Bank had in its wisdom thought of giving a higher LTV rate, or permitted a higher LTV rate for the banks. But I don't know, I'm not sure whether any bank is really using up that 90%, etc. Probably they may give a little more, but I don't think a prudent banker would give 90% of LTV.
Okay. And what do you think would be the challenges to your growth at the current juncture? I know you aren't providing any sort of guidance, but give us a sense as to what could, hamper your growth going forward. Or are you now seeing a lot of issues being ironed out? How has it been over the last few months for the company?
Okay, thank you. So, the question about liquidity funding, actually, we are very well funded now. We have been able to raise quite a lot of funds. So, quite a lot of funds in the NCD market from the banks, additional funding. So, we are actually very, very good. We have been able to do, and our funding is incrementally coming at a very lower cost also, because last year we borrowed at 9.5 and 10% for a 3-year and 5-year NCD. Today, we are able to get that for 7.5 and 7.75. So a 200 basis point reduction has already happened in the incremental borrowing cost. So funding and borrowing cost is actually definitely positive. The next is the demand. The demand, as I said, last 6 months, there was good demand because of the pent-up demand. People were not getting money. Going forward, there is, I'm sure, going to be good demand for the incremental business. And we see quite a lot of other banks and small other NBFCs and non-NBFCs also entering the segment. I'm sure with Muthoot Groups having its focused growth or focused attention towards gold loan, we will be able to do much better than many others, because some of the people who are entering in this are not realizing the operational intensity of this business. It's a very operationally challenging, operationally intensive business, and it also has got a lot of cost associated to these things, especially when you want to scale up. Probably people who just entered it just for the heck of it probably may realize that after a while, but focused players like Muthoot and others who are focused on gold loan will certainly see a good growth in the coming quarters and years.
Okay, that sounds great. Mr. Alexander, what about the RBI meet then? What are you expecting this time around? Anything in particular?
I think I'm not expecting much, because I don't think RBI will need to bring down the rates, because the rates are actually very, very low and very good. Even many of the loans, home loans, car loans, etc. rates, banks and others have actually brought it down to very, very reasonable level. And I am also, from not related to gold loan, but I am also seeing the real estate sector also showing signs of improvement, with some states charging lesser for the stamp duty, and home loan rates at rock bottom, or very, very, very affordable rates. I'm sure real estate also will certainly pick up. So overall economy activity is picking up. And to me, Reserve Bank in its wisdom may or may not do it, but to me, I don't think any more reduction in interest rates is required.
Okay, fair enough. And in terms of margins as well, if you can give us a picture on how you expect those to shape up going forward?
Yeah, as I said, we look at our interest rate spread. Interest spread is what we look at. So we get about 10% plus or minus 1 is what we usually aim at, and that we are getting now also. Going forward, incrementally, as I said, the interest rates have come down for us, incremental borrowings, but then we have legacy higher cost borrowings also. So when our actual cost of borrowing is really coming down, we would like to definitely pass on this incremental benefit or reduction to the customers. So we will certainly be reducing our yield also, or charge which we charge the borrowers. Definitely reduce it when the rate comes down, keeping our interest spread constant, so that our investors are also benefited and the customers are also benefited. Has been our policy all through.
George, thank you so much for taking the time out and speaking with us today candidly on where you see the gold loans actually head. That's the word coming in from Muthoot Finance.